Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what's the greatest lesson you have learned in stock trading? Answer by Anshu Negi. Having extensively studied the market for a couple of years and consistently trading since last 1.5 years, Mr. Market has taught me plethora of lessons. Know this, trading is gambling. Don't believe anyone who say otherwise. It's a game of chance, where you bet for uncertain outcome. But, to survive and thrive, all you need to do is rig the trading system in your favor with a decent and sustainable edge. Just like in the casino, how the house always wins. Similarly, try and apply the rules here. You will lose on some days. You cannot be profitable daily. Having a win rate of 5,460% is very good. There are only few people or systems with win rate more than this. You cannot hope to be rich in a year or two from trading. It takes time. Most indicators are just distraction. If you trade in futures and options without knowledge, you will have no future and you will be left with no options. There's no way you can de-risk your position while trading in this segment. Developing a strategy for a system takes a lot more than just time. Reading few blogs or books wouldn't be much of a help. Instead, observe charts on a daily basis for hours and hours, then maybe someday, something might click. Results of backtesting and live testing will be different unless you completely automate it. If not, the discipline needed is immense. Meditation is a must thing before you sit to trade. Nothing lasts forever. This applies to your system as well. Someday it'll become obsolete. In short, you can't sit and trade with just one system forever. Be creative and keep working on something new. There's always a faster gun. There's no system which operates at zenith level of perfection forever, excluding arbitraging systems. Don't be prone to taking short positions just because you loved The Big Short. Trend is your friend. Don't try and time the market or go against it. SMA, simple moving average, greater than EMA, exponential moving average, read. SMA is better than EMA. There will be certain days where you will make 23 months salary combined in a single day, and then there will be few days or weeks of a drawdown period as well. Accept it, embrace it. Don't join courses or workshops in a hope that you will get a new strategy for the money. Nobody will give it to you. On the investing side, never exit your holding completely. Always keep 5% holding forever. You'll be amazed at what that 5% could turn into in years. Never catch a falling knife. It takes time to stop the momentum. A car running at 100 miles per hour doesn't stop in an instant and reverse. You can be in handsome profits for the day, and then the odds can change against you within fraction of a second, so always be humble and never rejoice before you close all your positions for the day. Range-bound or bear markets are a nightmare. In my view, any system with equal risk, reward is very difficult to practice for a long time. Except if the win rate is 80% or more. And the most important lesson of all, learn to manage risk. Without it you cannot devise a system. Trading is purest form of risk management. I cannot stress this enough. Hope this is of some help to someone who is looking forward to trade for a living. Answer by Pinky Sarkar. One might buy a stock that explodes and generates huge returns in a short period of time. But that's a one-time deal. Sooner or later the same approach will result in bigger losses. There are no shortcuts to achieving anything meaningful and lasting in life. And it may work for a short time, but not for the long haul. The best approach is one that is methodical and focused on long-term growth. Investing in high-risk stocks may generate awesome gains, but it can also result in massive losses very quickly. The opposite is true for safer stocks. Risk in investing cannot be completely eliminated, but it can be managed by diversifying. Don't put all your eggs in one basket, and by limiting exposure to speculative stocks. No one can time the stock market with absolute certainty. There are trends and indications that can help in making decisions, which end up being right or wrong. You may buy a stock that goes down in price, or sell one that goes up in price afterwards. Over time the price variance won't matter much. Life is the largest stock market. No one can predict what will happen, or when it will happen. You can focus on doing the best you can in this moment and allow time to compound your success and mitigate your mistakes. Historically, the best performing stocks have been value stocks that sound boring. Think Procter & Gamble, for example. The well-established businesses, that have been around for years, don't garner as much attention as the up-and-coming darlings of technology. In investing they say invest in what you understand. If your strategy cannot be explained to a child, then it's more complicated than it needs to be. If you don't invest, you won't grow your money, and you'll lose some money to inflation. And if you invest, you'll grow your money, but risk losing some of it in the process. Open your online trading and demat account with Zerodha. In life, if you don't act on something, you will forego the rewards and risk of an opportunity, and you will bear the risk of staying put. On the other hand, if you act, you'll deal with consequences, desirable or otherwise. It's always helpful to keep the consequences in mind when we're making decisions. One of the basic tenets of investing is not to fall in love with a stock. In other words, don't let emotions cloud your judgment. When the company's fundamentals change, we need to cut our losses and sell. Then let go and invest the proceeds in something else. Everyone makes mistakes. I don't know of anyone who didn't pick the wrong stock, or held on to a stock longer than they needed to, and suffered financially. You can rely on someone else to manage your money and investment portfolio. But they won't care about your finances as much as you do. It's your responsibility to either manage your finances, or do your due diligence and pick the right advisors for you. Experience is a wonderful teacher. We learn from mistakes and success alike. We learn also by actively reading and applying new material. Investing, like any other area of life, continues to evolve. We learn from our own experiences. This is the most valuable lesson of all. We can't cheat time and take shortcuts, but we can work with time to grow slowly. When you invest in a stock of a company that pays dividends, then you reinvest the dividends, buying more shares. Your money will grow at an accelerated rate in the long run. You deserve all the success in the world. You have within you all the power, intelligence, and ability to achieve anything you truly desire. Life is always on your side. Open your online trading and demat account with Zerodha. Happy trading and investing. Pinky. Answer by Vinod Khanna. Stock trading is the worst nightmare of a retail investor who dreamed to be rich quick. If you are not sure of what you are doing, you are going to lose all your money in no time. Probability of success in stock trading is worse than gambling. Technical analysis provides information about the past and not the future. Lesser the patience, lesser the profits. Stock market rewards the wise and the strong. Essential tips to be a wise and strong trader. Learning curve. Everyday market is new learning opportunity. First, learn technical charts and all available strategies and continue understanding it with everyday market. Keep getting better. Avoiding fake entry points in the stock is also a success. Have money to last long. Most of the retained investors lose most of the money as soon as they enter the market and have nothing to trade when they actually start learning the basics. Divide money into 100 parts, if you are new. Yes, 100 parts. If you start with 20,000, divide it into parts of 200. 200 is the maximum you can risk in a trade. Don't buy options worth of 20,000 and wait for it to fade into a triple digit, even without understanding options. Never lose more than 1% in single trade. Last long at least to see your 100th trade. Stop the habit of adding funds to start fresh every time your account is wiped out. Enter only on potential upside and downside with proper risk rewards predefined. Never jump into buying some stock in a hurry or out of excitement. No proper support, resistance of the past for a good risk rewards ratio. Look for proper trades, confirm with volume charts for momentum. Diversify, most of them concentrate on single trade at a time. I personally like to diversify short-term trades depending on the market conditions. I love to do pair trade, which works well on neutral/dull market conditions. You can also hedge. Start trading only in futures market. My very personal view is that beginners should start with future trading. Forget option trading. Trading in futures makes you strong, responsible for the loss you make, makes you learn before you start trading. What if someone does not have the money to trade futures? He must use the money available to learn things instead of wasting it in short-term trades. Futures have limited stocks to enter, easy to track for technical signals. I have seen people adding 5K, 10K every 10 days in trade. Finally they would have lost 2 lakhs in a year. It even goes up to 1,015 lakhs in 34 years. No one can be 100% right. Yes, it is not possible to be 100% right. As I have mentioned above, that technical charts are information of the past, it cannot predict the exact future. It will be a guide to enter a trade with good risk-rewards ratio. A good risk-to-rewards ratio with 6,070% probability is what separates the wiser and stronger traders with others. Happy trading!